right, there we go.
There you
There
go.
we go.
Look. Every time we get on, I said we gonna have a blooper reel by the time we done with this thing. Cause look, I was on there talking to myself, and I was like, maybe what if
Looking around here, you saying, hey,
I should have? How you doing though? You doing all right?
hey, doing good, doing good.
Good.
Just trying to get some stuff knocked out. It's Friday. Everybody trying to get stuff done going into the weekend.
Look, I already know what you trying to search to. You trying to get to gym.
There you go. The J to the B.
Yeah, you know how to get to gym. I'm trying to see what's going on with Jack later on. And then we
That's what
gotta
I'm talking
go
about.
from there.
Hey, you know what? I might invite Crown over, man. Me and CR, you know what I'm saying?
Hey, it's been a long week. It's been a long week.
Very,
they, they,
very.
they,
And
they sitting there wondering anyway. They like, hey, when you calling me over?
pretty much. Exactly. And then you know what I'm saying, sports getting kicked back off. So you know what I'm saying, we got games going on this weekend. So
Yeah.
it's gonna be it's gonna be busy.
Yeah. Well, look, I guess we should just get right on into it,
And
right?
jump right on
Because
into it. Let's do it.
I got a lot to talk about. But I got a call right before we started. But,
Oh Lord.
so just some more fuel to talk about. You know what I mean? Those stuff. But and first off, welcome everybody. As you guys can see, look, my light done light. There we go. There we go. Look. It was bright outside a minute ago. I was getting good light from outside. Then it's cloud.
Yeah, well, then it got dim.
Right.
Hold on. I'm trying to figure out how I get my logo back here somewhere. Trying to get on your. How do I get my stuff back here? You understand?
Sometimes that's the camouflage for what's behind me. You know what I'm saying? I said I gotta clean the cameras and stuff behind me, so I gotta put some camouflage on.
Hey, I'm old cat, you know what I'm saying? I'm starting looking at my keyboard. What button do I hit to get this thing back here like that?
You crazy. Well, hey, well, we want to welcome everybody to Real Talk with a Realtor and a Mortgage Guy. We got our guy, Corey Smith from CMG Financial on the call today again. And then, of course, myself, Walter Davis from the Walter Davis. Look, I can't even do that today because I'm trying to take a half day off, kind of. So I'm a little more casual. I was like,
you going casual today.
Hey, I tell you what, when we was about to start, I said, I had my little button up to put on. I said, nah, they just gonna have to take me casual today. I said, I've been messing with adjusters and all kind of stuff with that, which, that's a good topic to get right in. First off,
right.
how you doing with the freeze? And, I know it's a week later, how's everything going with you and the family?
Man, everything is going good with me and the family, the immediate family, I should say. We actually made it out pretty good. So we didn't have any issues. Some of the people in our neighborhood had some issues, but we didn't have any issues. But my aunt and my grandma actually did have freeze pipes. And of course it busted. And they essentially, both of them actually end up losing the ceiling in 2 rooms. So the roof caved in, or not the roof, but the ceiling caved in and everything. So now they're just kind of waiting on their adjuster appointments. So they can try to go through that whole insurance rigmarole. And it's not anything major, you know what I'm saying, when you have something happen like that. But one, it just takes a mental toll on you. Yeah. And 2, who wants to deal with insurance? Because everybody knows about the BS games that they play.
Yeah.
It's just one of those things you don't want to deal with. Everything is going to be all right at the end, but you just don't want to deal with it.
Yeah, the hassle of the whole process. It's kind of one of them things, like we say, is we got to have the insurance. And we pay the money for the insurance for situations like this.
Absolutely.
But, it still is, they make it such a cumbersome process. Okay, got to get the adjuster out. Well, everybody got the same problem. So the adjusters are delayed by 3-4 days. Then they finally get out there. Then you got another week before it gets to the desk. And then the desk gives you a quote. Then they got to match it up with your deductible, which we all got a deductible. And we sitting there like, what? we don't remember. We don't remember we got a deductible. You're like, what you mean I gotta pay?
Hey, most cats don't have an issue with the deductible, you know what I'm saying, until they start seeing it come from that bottom line. They're like, okay,
Yes.
well, look, we need to redact, but we need to take that deductible away. You're like, what? When did my
Yes.
deductible get so high?
Yes.
And it's been like that in the beginning.
Yes.
Oh,
And
yeah, I've been there.
funny is you get to the point where you're like, hey, next time I re-up, I'm taking all the deductible off. You know,
Yes.
but then your insurance goes up. And
There you go.
Still like, well, I don't want to pay that much more in the monthly. Hey, look,
just put my deductible back where it is.
Yeah.
I'll just save extra and be prepared next time.
Yeah. Which you make a good point. I think that talking about people and and I know I always like to relate stuff to real estate, you know what I mean?
Uh-huh.
But having that security fund or having that little bit of savings for the deductible, that little bit of savings for something happens with the house. Talk about that a little bit and kind of like what you think, being you the money man, you know what I mean? What do you think are some good best practices to kind of get rolling on that? If you haven't, say you at zero and you ain't got nothing going on, you know what I mean? What's some practices?
I think the biggest thing is to be able to kind of look at your whole situation and then just try to determine a set discipline rule that you're going to live by every single time and not deviate from it. Mm-hmm. So most people is just kind of like, hey, look, I got a check that actually hits my account. I have no idea. I pay these, and these bills. Anything else that I have left over, then I just take that and I can go to Vegas, or, you know what I'm saying, I can go do whatever it is that I want to do with it. But most people don't take into account not just the bills, but you should actually treat yourself as a bill. Yes. So what they talk about is actually paying yourself. So, you know what I'm saying, it should be 10%, 15%, 20%, whatever extra you can give yourself. You should have a fund to pay yourself every single paycheck, every single month, or however your budget and your bills and stuff like that goes. So what happens is that once you're paying yourself every single month, now you have money not only to do special things for yourself, but now you have money just in case surprises and stuff like that happen. Now you got a little nest egg. Now you don't have to rob Peter to pay Paul in order to try to navigate and make it through. So I think for most people, it's most important to be able to come up with a rule, because there's no one size fits all. There's a rule that actually fits your budget and your financial situation. And then just make sure you stay disciplined and stick to it.
See, I like that. And I want to take it one step further, right? Because, as entrepreneurs like we are, and business owners, because, like I tell you all the time, we don't get paid unless it closes.
There you go.
So all the work that happens before then, we doing not for free, but we doing for the anticipated paycheck at the end. Okay.
There you go.
And, which that's another topic we're going to talk about here in a minute. But I want to take it to the next step and say that everything you said was 100% right. I would take it to one more level and say, actually open up a separate account, right? And pay yourself, don't chop the cards for that. That card, that particular account, you got to go into the bank to actually get the money. And the inconvenience of getting out the car, going in the bank, you know what I mean? And actually doing the whole process, that might deter you from going in there unless you really, really, really need it. Technology don't help us in this scenario because, we can move money around, but it might just be that one extra step that helps. And then, for me as a business owner, I have separate accounts. I have an account that's for my money, right? That comes in for the family. Then I have an account that's just for my taxes, because we pay taxes separately, right? And then I have an account that's kind of like my savings and fund money, And when I get my checks, all the stuff just kind of goes to its place. That way I'm only living off of what I'm supposed to be living off of anyway. And I don't even see that money. Because, it's always one of the things I like to say is if you take it right off the top, then you ain't got to worry about it. You know what I mean? So, you muted yourself, just so you know. Oh yeah, you trying to be smooth. You trying to be smooth there. I see what you do there.
Hey, look, this whole working from home thing, you know what I'm saying, wifey is like 10 steps in front of me. So I ain't want her I'm trying not to get her conversation picked up inside. So I'm trying to juggle here. I'm trying to juggle it, and obviously not doing a good job at it.
But you know what's so funny is that's where everybody at right now. So I mean, it's so real.
Oh, yeah.
You know what I mean?
Oh, yeah.
I got the look of the draw that I got my own little room. I can close the door, right? But sure enough, like right now, some people in my house, you know, like I got a house packed full of people right now. You know, as many people are, because as we talked last time, I told you I had a pipe that burst in my wife's office. The ceiling came down, and then, you know, go figure, I got a pipe that's burst in the back wall of the house. So when the water, look, we fixed the one pipe, we turned the water back on, it's water coming down my soffit like a waterfall in the backyard, on the back, you know. There's a pipe completely burst in there. And the sad part about that is, you know, like like I said, I've been kind of juggling all this stuff for a minute. The adjuster's out there, and he's like, well, I can only focus on things that I can see. And I'm like, wait a minute. And I know other people are going through this too, but you know, I'm like, wait a minute. Y'all here for insurance. I'm telling you what the plumber said. If I need to get the plumber on the line,
I'll call him right now.
He was like, well, what we can do is we can do what we see here, and then we can do a supplement. Oh, okay. So what you're saying is now I got to go tear out this wall, tear out this sink and this wall,
right?
Figure out where the plumbing issue is, fix it, and then send you a paper to say I need you to add this to the original claim, and hope that you're gonna give me I mean, I ain't talking about insurance companies like that, but you know what I'm saying. It's that extra step that you like. This is why people got a bad reputation with you. This is why people be hating dealing with you as insurance companies.
But you know, to go back to your point, where you talk about opening up the separate account and putting money inside of it, it's by design that way, that if it makes it more difficult for people to do it, there's less likely of a chance that they're going to do it. So insurance make it a little bit harder, and they make it and give these extra steps because they know the more steps that they give, the more likely, the less likely chance that you're going to actually follow through with it.
Yes.
So when it comes to, you know, kind of people saving from a different account, if you don't have a card to use for that account, you put money to save inside that account. If you figure in order to get to that money, I got to drive up to a branch and get out, or pull to the drive-through in order to get that money. You know what I'm saying? I'm not gonna do it.
I'll figure something else out.
I'll figure something else out. But if it's easy enough for where you can lay in bed, look on your phone, and transfer from one account to the next, oh yeah, you easily go do that.
Yes.
Because not everybody has this discipline to put it inside just, you know, a savings account and leave it there.
Exactly. And I tell you, the benefit of it is, whether the insurance, this is the benefit of doing that. Because like I just told you, I do that regularly. Is whether the insurance company cut me a check right away or not, I'm gonna get my stuff fixed and get my stuff back to normal. You can't get what I'm saying? And that's what people have to understand, the benefit of it. The benefit outweighs the overall concept every day of the week. You know what I mean?
Oh yeah.
And if more people can do that, you know, when it comes time, you know, if I'm 25 and I start working and I'm tucking a little bit aside, okay, a great opportunity pops up, like an investment opportunity. I can put some money in it because I got it in the bank. Or I'm ready to buy a house. You know, me and the girlfriend, or me and the fiance or wife, why are we ready to go now? It's already there. You know what I mean?
Right.
And that's where, you know, getting started on these early, I don't think there's any age that you have to be. You know what I'm saying?
Yeah.
You started.
It's never too early.
You know,
it's never too early.
It's never too early, and it's never too late. You know what I mean? I think that, you know, you can always create this account, but I will say the earlier you start, the better, because the more money you're gonna have in there.
And like they say, the earlier you start, the more likely you are to build good habits.
Yes.
Right? So you know what I'm saying? It's something that I consistently talk to my high school son about, which he's starting to grasp the concept of it. But of course, you know what I'm saying, I try to talk to my 7-year-old about it, and you know what I'm saying, but of course it goes in one ear and out the other.
Yeah.
He just wants to, it's burn a hole in his pocket. As soon as he loses a tooth to get that money, he got to go buy V-Bucks or go he got to go buy all this other stuff or whatever case may be, Robux or whatever. He got to spend it. But eventually, you know what I'm saying, he'll get there. But the sooner you can start those good habits, the easier they will become over life.
And I think the other benefit that a lot of people don't think about it is your kids start to see you doing it. And though, like you said, if they're young enough, they just go in one ear and out the other, right?
Yep.
But they seeing you doing it, and they seeing the repetition of it happening over and over and over again. Whereas they just inherently then say, either at some point they ask you, why do you do that? And you can explain, or that's all they know. It's kind of like the same thing we talked about a couple of weeks ago when we talked about bad credit and how it just generationally goes from person to person to person. Like my mom and dad had bad credit, so I got bad credit, and my kids got bad credit. It just keeps going down the list until somebody decides to change it. It's the same thing with good habits too. If you create some good habits, it'll also make them start to do stuff that, put them ahead of the curve.
You know what? I tell you this, and especially if you like 21, 25, and you young or something like that, if you build good money habits, I promise you, there's going to be so many deals out there that you get just from your buddies. Like, imagine if you got good money and your buddies are horrible with money, whatever the case may be, right? There's going to be opportunities where they're going to be like, okay, well, look, man, I'm trying to sell this PlayStation 5, sell this PlayStation 4, PlayStation 5 or whatever, man. I got to get money to try to pay rent, or I got to go try to pay this or whatever the case may be. So I'm getting ready to sell my PlayStation. And imagine if you got the money to be like, hey, man, how much you want for that PlayStation?
Exactly.
Let me go get it. You know what I'm saying? Here, just let me get that PlayStation.
And look, and you've been wanting it because you've been looking all over the place and can't get it.
And you've been looking, and you can't get it.
Yeah.
Come on now. And you know what I'm saying? You will run into opportunity, especially when cats are young, because cats are, you know what I'm saying, not as responsible. Not everybody is responsible with money when you're that young. So if you're that eyeball out that actually saves money, then you know what I'm saying, it's going to be a lot of deals to be had. Not with just your buddies. Not like you're trying to take advantage of your buddies, but no, it ain't your fault they're not responsible. So, you helping them out. So you give them the money that
they get the benefit of still coming in the house and playing. So,
that's it. They already.
But it solves the issue a little bit in the
solve the issue.
And then
you know what I'm saying, it could actually be anything. So you know what I'm saying, they got all these different marketplaces and stuff like that. There's always, through the grapevine, you can hear about somebody's trying to get rid of something or whatever the case may be. It's just a good position to be in to be able to take advantage of that. Now, the catch to that is that you don't want to be out there bragging about, you know what I'm saying, the fact that you got good money habits and good savings. Because guess what? Then you're going to be the IOU person. You're going to be the bank to your buddy. Hey, man, can you let me hold $200 to get me to next week?
Look, I still got a couple people that owe me money from 15, 20 years
Come on, man. You said you got those buddies that's going to do that to you. Man, I need 500 to hold me over. They're going to repossess my car or something. You know what I'm saying?
Look, I've been looking at them like this. Hold on, I got you. Hey, hold on a second. Hey, man, let me get back to you.
Hey, I hit him with that look at, man, let me see. I got what's called man, I don't think I got it. I ain't got it this month, man. I ain't got it this month. I just can't do it.
Well, and it's kind of like what you were saying, that the hard part about that is you want to help, but at the same time, we can't go down that rabbit hole. You know what I mean? We can't go down that rabbit hole. And that's what I like for our people in general. You know what I mean? I'm talking about, people of color. Okay, I'm just going to keep it really real right now, is that we got to stop co-signing for cars and buying things out of that we really don't need. You know what I mean?
Right.
Like, my son's gotten to a point now where he's about to buy him a car, right? And he young, and I get it. You know what I mean? He like, now, as you know, like you, my son is 6'5". He big, okay?
Yeah.
So he need a car that he can fit into. And he go, yeah, I'm thinking about that, getting that Durango or the Charger, you know. And don't get me wrong, I get it, right?
Yes.
And I'm trying to explain to him. I said, look, you know, and everything come full circle, right? So I talk about, remember, we was talking about credit and how we got you in a position now where your credit is in relatively good shape. Okay.
Right.
You just don't have a lot of it, right? But that first vehicle that you get is going to impact it hugely because you got to make sure that's within your budget so that you can pay it on time so you can continue to build your credit to a high level, right? And I said, you got to think this way. I said, and I'm not, you know, they're adults. You know, as you know, I got two sons, 25 and 22. So they grown, they can make their own decision. But I try to be the advisor, the guru, you know what I'm saying?
Right. You try to be dad.
You trying to be dad. And I said, look, man, look, if, you know, two things I tell them. First off, if you can get a new car versus a used car, I would get a new car in your state because you don't want to have to be dealing with maintenance and stuff. And you know,
look, but hold on, let's stop right there. Just on that point alone, you know what I'm saying? People need to understand that there's this stigmatism out there or this negative connotation that it's bad to go get a new car. You know what I'm saying? And then you're saying a lot of the times it's been something that's been passed down. Oh, you want to get something that's been off the lot. 4-5 years or something like that.
You're gonna save
money. But if you go get that junker that has miles on it or whatever the case may be, you don't necessarily know the inner workings of that car. You know what I'm saying? It may sound good, it may look good, they done polished it up all on the outsides, but you know what I'm saying, you don't know anything can go out the next week or whatever. And if things go out and you consistently have to fix it and you consistently have to pay an extra $300, $400, $500 on a used vehicle, then you might as well have went and got that new vehicle. Then you ain't got nothing to worry about. All you got is your monthly note and maintenance. That's it.
Look. You know how I am about new cars and used cars anyway. Not that I'm against used cars.
Right. Ain't nothing wrong with it.
Because, you know, in my line of business, I can't be worried about whether or not my car I'm taking somebody to go see a house and my car shut down. I can't be worried about that, right?
Right.
And so I tend to go more new than used, right? And sure enough, you know, you walk in there, look, they got it to the point now where it's almost it's thinkless. Like, like my car I have an app. Okay. I can turn my car on. You remember the old school? We used to have to get auto starters and all that stuff.
Oh yeah.
Man, I got an app. I can turn my car on from the app. I can lock the doors. I can unlock the doors. And then it sent me a report that yesterday. I went on there for a minute. It sent me a report telling me, well, your oil is at 82%. And it was running down, your tire, all your tire pressures are good. And this is what it was looking like during the cold pressure. I mean, it was, I'm like, and then it tells me when my anticipated next oil change will be. Okay, your next oil change should be in April, blah, 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 blah.
Right.
So this is what I'm saying. We'll get, you know, that's part of the technology that could be advantageous.
Of course.
To a young person that's not used to maintenance and doing certain things. So there's benefits to buying new too. And to finish my point is, I was telling them, I said, look, man, at the end of the day, the steps you take today is the steps for tomorrow.
Right.
So you buy a used car, it's got issues every now and then where you got to, I got to change the tires. Oh, the belt went out. Oh, this and this.
Right.
Now I'm paying an extra $150, which comes from that other account that we just talked about. It comes from the savings account now because you ain't anticipated this.
Right, exactly.
You know what I mean? And you still got to pay the note and the insurance.
Yep.
And then if something bad happens, where does it come from? The money comes up from that account.
Yep.
Or whereas worst case scenario with a new car, I get insurance. One, my insurance covering it because it's a new car.
Right.
You know what I mean? And two, the odds are less. They actually say that your odds are less when you drive a newer car to get into an accident than when driving a resale used car, which is kind of crazy when you think about it. You know what I mean?
It is. And then especially, you know what I'm saying, when they got all this new technology stuff where the car automatically stops for you.
Oh, yeah.
It's like accident prevention and all this other stuff that they have going on with the cars.
Look, my car hit the brakes on me and scared me. And it was funny because the car in front of me was turning into the Kroger. And I just, on normal drive, we're like, oh, we good. You know what I mean? I got enough comments. No, but that sensor was like, oh no, you little too calm. So it hit the brakes and slowed me down. I said, oh, this. I didn't even know it could do it. I was like, oh, ain't this is crazy. But it's kind of like it's like I tell people about the house business, right? You're not gonna buy your dream house on the first house more times than not. Unless you won the lottery, you got an inheritance or something. You're not buying the house that has everything in it that you never gonna buy a new house with, right?
Right.
Same thing with your car. I know the flashy commercials feel good, like, ooh, that Mercedes or that that BMW, ooh, go on down to the Chevy dealer, you know what I mean, or the Kia dealer, because at the end of the day, if you can do it right, your next car is the car that you can, because now you got the better credit. I can get the 3.9% interest or the 0.9 interest. I can get all that stuff that they promote on TV to get you in the door anyway.
Man, a lot of people don't necessarily understand or even think about the simple fact that, some of the notes that they're paying now, like the $600-700 notes on a Chevy Cobalt or something like that.
Yeah.
You know what I'm saying? Like you could be actually riding luxury with that same note. You know what I'm saying? All you gotta do is take care of your credit.
Yeah.
Just take care of your credit. Just pay people on time. Be responsible with it.
Yeah.
But what happens is people put themselves in positions to where they're already going to end up losing. They're going to end up losing at the end of the day because now they got the Chevy Cobalt that they done bought, note $600-700. So they to the brim to the max on paying this note because their credit is bad. They had to get with a company that was going to actually approve them. And that company that approved them gave them a 23% interest rate.
Yeah.
Which they probably still don't know that they're paying because they never look at the documentation. They just heard that they approved and they signed off on it, right?
Mm-hmm.
So now you're paying this high interest and you're paying this high note on this Chevy Cobalt and something breaks down on it. Now the mechanic tells you it's going to take $500-600 to actually fix it. So then when he tells you it's $500-600 to fix it, you ain't got that in the budget right now.
Mm-hmm.
So guess what you got to do? You know what I'm saying? You got to go find some other transportation and you got to pay for that. So now you cash strapped, and then you're going to end up not making that $600-700 payment because, you got to give up something.
Yes.
You got to give up something to pay somebody, right? So the actual note for the car has to actually take the hit for it, or the insurance has to take the hit for it, or whatever the case may be. Now you're putting yourself upside down from the beginning, but it was a bad decision from the beginning. It's like just take care of your credit. And then you don't put yourself in those type of positions, period.
Yeah.
And then the other thing, just to jump back to your point that I wanted to say is I tell people all the time, man, don't go down with the Titanic. Don't go down with the Titanic, man. If your friend, your cousin, your mama, your daddy, or whatever the case may be, you know what I'm saying? I get it, they family. But at the end of the day, they put themselves on that boat.
Yes.
Why are you going to go jump on that boat to go down with them just because that's your people?
Yes.
It just doesn't make sense. Then how's everybody going to do better? How are you going to help them up later on down the line, whatever the case may be, if you sank down in the ocean with them? Like, it just doesn't make sense. Don't go co-sign for somebody that has bad credit, especially for a car that you ain't going to use. Why?
Yeah.
Just say, hey man, I'm not gonna do it. I like my credit. I need my credit. Like you know what I'm saying, you messed up that car and it had a repossession. Your credit is jacked up. Now you want me to co-sign for that. There's no guarantee that you won't mess up that car. But the only thing is when you mess up that car, and typically that's the case, when they mess up that car, not if, when they mess up that car, now you taking me down with
you. Yep.
So I know for a fact, if you don't care about your own credit, you now sure don't care about mine.
Yep. Well, and then let's take that one step further. And if because a lot of people sign for their kids, you know what I mean?
Yep.
Their kids are jacking up their credit, so then they need to sign for their kids. Okay, well, you got to have an understanding that if you don't have the money to cover both of those notes, your note and the note that you co-signing for,
Don't do it.
then you can't do it. Because that's the only legitimate way I can say, because I'm not saying, you know, in the big scheme of things, I'm not saying don't co-sign ever. There's not a situation, right? You might have a new 16-year-old or 18-year-old, you want them in a nice, safe car and this and this and this. Now, if you
and they're responsible.
And
you know, your own kids, they might be responsible. So you know what I'm saying? It's okay. It's a safe bet.
Now, if you grown, if you 20-something, 30-something, and asking me to co-sign, we got an issue already.
We got a problem. We got a problem.
We already got a problem. You 30-something, you calling me to co-sign on the car? No, I paid my dues before you was born. I'm not about to pay them again. You know what I mean? And if I'm gonna co-sign, you get in the car I want you to get. You know what I'm saying? Which creates a whole nother animal, because I'm gonna get the cheapest. Look, all you need is something to get you back and forth to work.
That's it. Point A to point B.
You know, get you from point A to point B. This car, in case you don't pay it, I can go ahead and pay this $150 note, $200 note, or whatever.
Yep.
And you know, worst case scenario is I'll be repossessing your car and selling it, because I ain't gonna play that either about you not paying your note. But you know, like, we got to get smarter. If you can't do that, then you shouldn't be co-signing for anybody, for anything, for any reason, anyway. You know what I mean? And you know, I know we talk about cars, but
that could be for multiple different things.
It could be for multiple things. And what people don't understand is all these things relate to some point when we get to real estate. When we get to the point where we want to buy a house or even rent a house. You know, I have a client that had wanted to rent a house, and they couldn't rent it because their credit was jacked, because they had, you know, the one they co-signed for was repossessed, and then, oh, that wasn't my car. It's on your report, though. You know what I mean? So it don't really matter if it was your car. It's on your report. You know what I mean? Report.
Yeah. And people actually come to me and tell me that as if, you know what I'm saying, oh, well, I'm just going to disregard that car. Like, that's not my car. It's like, okay, well, you know what I'm saying? It's still a charge off or a repossession on your credit. Like, it's going to still hurt your credit. There's no way I can actually take that off. Just call the credit bureaus. Oh man, that ain't their car. You know what I'm saying? It wasn't their car that repossessed. It was the other person that car. Won't y'all take that off their credit report? Like, there's nothing like that exists.
Yes.
But people tell you that, you know, as if you know, it actually means something.
Yes, and it's so frustrating. I think for people like me and you in our position, when we're really trying to help people, and you just sitting there like, there's no way I can help you right now, because we got to wait till this thing, either you pay it or something, because this one of them things is going to be on you. This just happened 6 months ago. You know what I mean?
Or it just happened a month ago.
Yeah. This ain't something that is 10 years ago, you know what I mean, when you was 20. Like, this just happened more times than not. And usually, in a lot of cases, it is because of somebody else, you know. But
I don't know what it is about wanting, after you get a car, then people want to buy a house. And it's never the opposite. Yeah. Well, I shouldn't say never, but you know what I'm saying, majority of the time it's not the opposite. You know what I'm saying? It's just like, why don't you think about getting a house first, then go get the car after that?
But you know what I think that is I think they don't understand, and some of it's just ignorance of the understanding. You know what I mean? Not in a negative way, like I'm calling them names. It's just ignorance of not knowing this information. They don't understand that the difference between a house being an asset and a car being a liability or an expense. And I think once you understand that, you say, okay, the house is an asset, so it's going to appreciate. It's going to grow in value. So I want to have this in my portfolio. I want to have this in my group of things that I own. And with this asset, I can buy more liabilities or expenses. You gotta get what I'm saying? Is because I'm using this asset positively and grow. Now I can go and buy something that's going to depreciate over time. And you know, it's kind of like, if you really go back historically, people really, you know, people bought houses before they bought cars. You know,
Yeah.
or in some sense, they bought land before they bought cars. You know what I'm saying?
Oh yeah, absolutely.
And they could always draw loans against their property and their loan because it was an asset. They know that that's going to be valuable down the road.
Right.
And many people wouldn't take loans against their car against their house historically to buy a car. You know, back in the early 1920s and all that stuff because of that reason. And I think in today's world, we've got so convoluted in the conversation of not understanding these basics that we think that getting a car is a positive. Plus, you know, we put the car in the position of value more so than the house, I think, in many cases. You know, like I drive this every day, and I'm not saying that car is not valuable, but what I'm saying is in the mix of things, like for instance, and we'll talk going back to the freeze. I was talking to my son rents a house, and his house flooded. They basically they all their pipes busted, the living room, kitchen, hallway, like
everything,
almost everything in their house, right?
Right.
Well, they rent that house. They one of the people living up in here right now, you know, on a side note, but no,
hey, why you gotta go to the grocery store a little bit more often?
Look, cooking, look, and he got the whole family here, of course, him, his girlfriend, the dogs, everybody, you know. So, you know, we live out of whack right now with the. I'm down a room and we live out of whack, but you know, I love that they here. You know, I mean, in the big scheme of things, I love that they here.
It's good to have all the family there.
And I'm glad they in a position. I'm in a position that I could do this, where I can say, "Hey, come stay here with me, and you good." Like it ain't one of them things where we crowded. You know what I mean? Where we, you know, well, I only got a 3-bedroom and I got 8 people in my house. You know what I mean?
Oh yeah.
You know, but that comes from those strategies that we talked about before that put me in this position to be able to
put that in position, right? But so you don't just you walk it and talk it as well.
Oh,
there you go.
Oh yes. You got to. You know, I mean, at the end of the day, I want more stuff. You know what I mean? And I want to be in a position to have options. I want to be able, like I said, I didn't have to wait for the adjuster to come to my house to fix my stuff. I could have went on and fixed it. And been done with it. But I want my insurance check because that's what I pay insurance for. You know, stuff like that.
Oh yeah.
So I'm gonna go through the process.
You pay so much money for it. I need some of that back. I need that back.
Yeah, you know, and I'm gonna go through the process and be inconvenienced through the process because I do that part of it. You kind of get what I'm saying on that? But my point I was trying to make was, you know, my son's in the rental. You know, they still want him to pay his month of rent. And he ain't living in the house. Okay, he's not living in the house.
I'm not surprised.
It's a management company. He's on their time when they done ready to get the people out there to fix it, and then they can do that. You know what I mean? They have, as a renter, you have no control over any of these items. You know what I mean? As a homeowner, I got complete control. Like I said, I had a plumber in here. I shut off that bathroom over there in that room. I got the rest of my water running. I fixed half of the stuff so I can be functional in my house. And then I just wait out the room. You know, it's only affected it's 1 or 2 rooms. I can wait it out and get it done and not be completely inconvenienced. You know what I mean?
Right.
Trying to pay hotels and all the other stuff. You know what I mean?
Right. So, on top of rent at that. You got to pay hotels, other expenses. And when you got insurance and you got your own home, if you got to go somewhere else and you cannot live inside your home, most policies cover your expenses staying somewhere else. If you're renting and you got to go stay somewhere else and you have to pay the rent there at the house, like nobody's covering that. That's out of pocket cost. You're not getting recouped for that stuff.
Yes.
That's what people don't understand. But I give the people a kind of a little tidbit, a little nugget when it comes to kind of what we was talking about as far as the car situation going there. I don't want it to seem like, you know what I'm saying, we're just beating up on everybody because we know everybody's situation is a little bit different. So I do know there's some situations where people have to have some way to get to work back and forth. Because if you can't make money, then you can't make the moves that you want to or that you need to.
Yes.
So when we talk about actually being able to purchase a home, my thing is, why don't you explore the option of maybe renting a car? If there's something that happened or whatever the case may be, and you got to get back and forth to work, instead of running down to the first dealership that you see and just throwing down money and trying to get anything that you can get because you need four wheels, why don't you look at renting a car first? Because renting a car does not go on your actual credit as long as you pay them and they ain't trying to collect from you. Yeah. So as long as you pay them, why don't you just rent the car? Let's get a house first, and then you can go out and get that luxury car, whatever it is that you want to get, whatever you want to get yourself into. Then you can get it at that point, but not before getting a house do you go out and get a car, and especially a large note on top of that.
Yes, and I'm gonna tag on that and say, I agree. We're not trying to beat up on people about cars. What we're trying to say is make smarter decisions. Make better decisions. And instead of buying the car, you know, it's one of the sayings, you heard me say this to my clients before. Hey, no big expenditures. Why are we doing this house process? Blah, 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 blah.
Yep.
The day we buy the house and sign off and it funds and you get your keys, you can go buy a Lamborghini if you want to.
There you go.
Ferrari, buy whatever you want.
There you go.
But
there you go.
Let's get this done with first and then go. Primarily because I know that asset is a plus versus having a, it's harder to explain a $700, $600 car note when you're trying to get a $1,500 house note. You know what I mean?
Right.
Like, okay, your car's half of your money.
Yeah, the mortgage.
You know what I mean?
Yeah.
And you saying you got enough money to pay both of these? And insurance on both of them? And you know what I mean? You know, so just
and the whole credit thing actually helps you out from both perspectives. You know what I'm saying? So like, you know, it shouldn't have to take you wanting to buy a house before you actually try to take your credit serious. Okay, well, what can I do to actually increase my credit?
Yeah.
Well, let me go see a credit repair person because I want to be able to get into this house. Like, it should be the same mindset for a car. Yeah. Because, you know what I'm saying, the better my credit score is, the better my interest rate is going to be, the better car I can actually purchase.
Yeah.
I don't have to purchase this hoopty that already has the spare tire on there just because my credit is jacked up. Right? You know what I'm saying?
Yeah.
So it helps you out all the way around. So you know what I'm saying? Again, the credit should be the number one thing. And you should start not like next year, like starting now, today.
Yeah, like today.
Trying to make sure you work on that.
Yeah. Well, look, we got about 10 more minutes left. And I want to talk about kind of some of the scenarios of what's been going on this week in regards to housing. I know we've been talking a lot about financials and credit and cars. But I want you to explain to the people about appraisals. Because as you know, with the freeze, it kind of threw things off. There was appraisals that couldn't get done. And then that slows the process because now the appraisals don't get back to the lender so that they can then do their final paperwork to get it to title, So if you could just kind of give us a small synopsis maybe of kind of the importance of an appraisal.
Okay.
What happens when an appraisal, why can't a person buy a house when the appraisal comes in under what they wrote the contract for? Right. And then maybe just a little bit of how that slows the process after the renegotiation that we do on our end for the client.
So from the appraisal standpoint, one, let me start off with this, and legit, I've had this question several times, but when it comes to you going under contract and you actually doing a, which by the way, I got to get you a CMG cup. I can't stand it. I gotta get you a CMG
cup.
Cup.
You know what I said? To that sidetrack, I didn't realize until I had thought about it. After I had already put the coffee in it, and I said, man, this is one of the old cups. I've been trying to do stuff like I've been trying to put it on the side.
But from the perspective of actually, an inspection is not the same as an actual appraisal, right? So when you actually get under contract for the property, you do something that's called an inspection. An inspector actually comes out there and he checks the mechanicals of the actual house. Does the water heater work? Does the furnace work? Does the AC work? That is completely separate from an actual appraisal. An actual appraiser is going out there to make sure that the house is worth what you're under contract for. Either it's worth that or it's worth more than that. On some occasions, the property may come back and the appraisal says that it's worth less than what you're under contract for. And then when it comes to the actual contract, to that part, I'll let Walt talk to that. But the importance of the actual appraisal is, one, to make sure FHA has their own conditional guidelines. So the property has to be in a specific condition in order to qualify for FHA. There's a certain condition for VA. There's a certain condition for conventional. Conventional being the most lenient.
And real quick, I don't want to cut you off your thought pattern here, but why do they, what do they mean by, what do you mean by condition? Why does FHA have a condition and VA have a condition versus conventional?
So FHA, when it comes, and VA comes to, there are government loans. So they're a little bit more stricter as far as the actual conditions of the property, right? So when you actually walk into the property, you have to have some kind of flooring down there. Like you can't walk in and be concrete, just an actual slab inside the house. You can't have holes in the roof. You know what I'm saying? A big hole, you can look through and see directly outside or whatever the case may be. It has to be a livable condition house. And for FHA, you know what I'm saying, you can't do, there's no investor loan for FHA. So it's solely about protecting the actual homeowner, the consumer is what it is. So they just want to make sure the condition of it is up to par to where it's not going to actually cause any hazardous kind of problems, health risk, or whatever the case may be to the actual consumer. Now, when it comes to actual conventional is a lot more lenient because, one, it is now, but it didn't start off. It was started off as a more privatized entity when it comes to conventional. The investors that back to conventional. So it's a little bit more lax. So you don't necessarily have to have flooring within the property to be able to get it done. They're still going to make sure that there's nothing tremendously hazardous or poisonous or that is still in livable condition. But it's a little bit more lax as far as being able to get that type of loan when they come out and take a look at the property. It's not as strict, so to speak. But outside of that, you know what I'm saying, that's just a little small tidbit. The number one important thing is you have to imagine from a bank's perspective. A bank doesn't necessarily, we're not in the game of actually checking and making sure that the property is worth what it's worth, that you're getting a deal or whatever the case may be. The only thing the bank is trying to do is protect the money that actually goes out. So the appraisal helps protect that because the appraiser goes out, the appraiser is going to take a look at the condition of it, the appraiser is going to take a look at the comps of it, the appraiser is going to say, okay, well, look, either it's worth this or it's not worth that. So then we just kind of let the specialists or, the people that do it kind of stay in that lane. They tell us what it's worth, and then we'll tell you what we will and won't do. And what we won't do is lend money out on a property that is not worth what you're actually purchasing the property for. Now, if you choose to actually pay extra for that property because you just love it that much, then that's completely on you. But you're going to actually buy the difference down. So what I mean by that is you have a property that you're under contract for $150 on, your appraisal comes back at $146,000. Well, you have to pay that $4,000 difference, dollar for dollar, on top of everything else. So on top of the 3.5% down payment for FHA, closing costs, so on and so forth. So long story short, you understand, there's no way to get around an appraisal when it comes to doing a loan. You have to get an appraisal done, period.
Gotcha. And I think the interesting part to let the people know too, kind of our side of it, is when that happens, I don't say we completely reopen negotiations, but at the end of the day, the property is only worth what the property is valued at.
Right.
Per the lender. The lender's saying, okay, this is what the value came in at. This is what I'm going to give you the money for up to this amount. And as a buyer, you know, and I'll talk kind of both for as a buyer and a seller, right? As a buyer, you have to understand we kind of open the negotiations. It gives you two options, well, really three. You can pay the difference.
Yep.
You can, of course, back out of the contract, and as long as the paperwork's right, you can back out of the contract and you're protected on that because it didn't appraise. And then that third option is kind of like that negotiation option, you know, where you can figure out a way where it's a win-win scenario for both sides of it, okay? Depending on how much you want the property at the end of the day, okay?
Right.
From a seller standpoint, I think you have less options. It's really about, this is what it came in value because they measured it. It is what it is.
Yep.
And you as a seller now have to come to the conclusion of readjusting your numbers, okay? And saying, this is what I'm gonna make instead of that. Right. And come to terms with it. You might not like it 100%, but you're gonna have to come to terms with it because I think what sellers forget is okay, you terminate that contract. Everybody terminates and you put it back on the market. They can't sell that house for more than that price. Or let me rephrase that. They can if somebody wants to pay more, but the appraisal is going to follow it for like 6 months. Am I correct in
that? FHA. FHA it does. Conventional, not so much, but you know, from a little bit more technical standpoint, when it comes to FHA, there's essentially a tracking device, is what we call the FHA case number. That FHA case number will get assigned to that actual property, and then that's the tracking device. So if there's an appraisal that's ordered on that, that actual case number stays with the property, doesn't necessarily go with the actual person, it stays with the property. That appraisal that gets logged into that case number stays with the property as well for 6 months. So anytime another person comes and tries to buy it, and they try to pull a case number on that actual property, the case number that's already been assigned is going to pull up. And then when they actually look into it, there's going to be an appraisal attached to it. So then that's going to cause the seller's problem. It's going to cause the buyer's problem too, which I'm dealing with one like that right now from a builder where it actually didn't appraise and they logged the actual thing in. They logged the actual thing into the system. So now it becomes a thing where, hey, look, what are y'all going to do? Like, you know what I'm saying? Y'all got pretty much dropped the price because this person, you know, is not coming to the table with the difference and truthfully doesn't have the ability to come to the different table with the difference. So like, y'all gonna have to do something if y'all want to make this deal go through. And we're dealing with that now. So it happens more commonly than people may think. But you know what I'm saying? A lot of times you're able to resolve it and then keep on going down the road.
And in my lane, I think it's important. That's why it's so important when we give those comps, you know, and more times than not, you know, everything we do is an estimate. We're not an appraiser, so we can only give you an estimated value of what we, based on what the houses have sold in the last 6 months and so on and so forth. But that's why it's also important to understand what you're offering when we make those offers. You know what I mean? Because as an agent, we're always going to make a recommendation based off of what's happening in the market. But at the end of the day, it still comes down to that appraiser at the end. And the dilemma that a lot of buyers have is they say, okay, it came in, we're going to back out. What happens to my money that I paid for an appraisal? I paid for an inspection. I paid for an resale cert with HOA and all this and all that. And I try and explain that though, that's why we generally, in a general sense, we do the appraisal at the very end, or relatively towards the end, because we're trying to make sure that before you know, or let me rephrase that, while we get that appraisal done as soon as we can, but we try and delay some of that stuff as much as we can.
Right, of course.
The reason why is so that if something like this happens, you haven't come out of pocket. But at the end of the day, like in a scenario I have right now, I mean, we were supposed to close a week ago. And literally the appraisal just came in, you know, Monday. And so now we're in the midst of this scenario where we're trying to, and it came at quite a bit, you know, it wasn't the $2,000. It was, I mean, it was quite a big chunk of difference, which happens. But that's because the measurements were different than what was said. You know, it said it was 3,500, it came out to 3,000 square feet. You know what I mean? It's
Right.
a little bit different. So the acumen. So I say all that.
Yeah.
Go ahead.
The other thing I was going to add to that is, you know what I'm saying, is that, you know, appraisers are humans, right?
Yeah.
So, you know what I'm saying, sometimes, you know, there's mistakes to be had from the appraiser's perspective. And if that's the case, then, you know what I'm saying, sometimes there's the issue, there's things where you can actually do stuff to kind of say, okay, well, look, you know, hey, we don't agree with the actual valuation or whatever. Why didn't you look at these comps? Right. You know what I'm saying? And then you can send those comps. Say, hey, man, you know what I'm saying? I think you missed these. These are better comps for whatever reason. And we're able to look at those. And then the appraisers sometimes would actually take a look at it and be like, man, you're right. I don't know how I missed that. Okay, well, look, let me adjust this report. And then, you know what I'm saying, we can get a better value or whatever the case may be. Or they might have, you know, mismeasured or, you know, whatever the case may be. And a lot of times, you know what I'm saying, there's things that can be done to kind of, well, not a lot of times, but sometimes there are things that can be done. It's kind of like rolling the dice. You know what I'm saying? You know, sometimes appraisers have bad days. Sometimes they have good days. Sometimes you may catch them on a, you know, on a bad day where, you know what I'm saying, they got a lot going on, they stressful life or whatever the case may be.
Yeah.
You just may happen to pull the short straw. But and many times, you know what I'm saying, there's stuff that you can do to kind of figure it out, so to speak. So I don't want to scare people to be like, okay, well, look, you know what I'm saying? You can get a bad appraisal, you know what I'm saying? And you got all this money on the table and you're screwed, man. You're screwed. So I don't want people to think that. Just know that, you know what I'm saying, you know, sometimes that things, you know, a lot of times those things can possibly be worked out unless you just come to, you know, a seller or a buyer that's just kind of, you know, they just not willing to work. Then sometimes you just can't put it together.
And realistically, I've been doing this for 20 years, practically.
Mm-hmm.
You know what I mean? Ever since 05, I've been in this business doing this, okay?
Uh-huh.
And all that time up till now, okay, even during the bust, when I was working during the bust, and you know, those appraisals was all over the place, okay? Even up to this point, I think I've dealt with maybe 3 or 4 of those. You know what I mean?
Right.
So it's not it's not a common thing that happens all the time.
Right.
But just I always like to say, just understanding that if it does happen, these are kind of some of the things that we kind of need to go through to process it,
right,
to get you where you need to be. Because at the end of the day, if they don't want to budge and look, we'll go find another house.
Yeah.
Let's get out this one, get your earnest money. We'll go negotiate on another one. And I'm a firm believer that the right house is the right house. So at the end of the day, that house wasn't meant for you, but for that reason. And we moved to the next house, and it's much better for you at the end of the day, and smoother and all that stuff. So, you know, that's kind of my thought.
Let them sellers kick themselves. Because chances are you move on to the next property and that property end up just sitting there, you know what I'm saying? They're gonna be like, man, I should have just went ahead and negotiated with them, been fair.
Well, and that's the most important. As a seller, I always say that's really your best option because you already have a deal on the table.
Right.
Let's figure out how to make this a win. You got a deal on the table of someone who loves the house and you want to move, you know? So let's just figure out how we can make it work. And then having, you know, and as agents, they work through it and try to make sure that it's a win-win on both sides as much as possible. You know what I mean? So, so okay. Well, so look, we were talking about all kind of stuff.
Many topics, and many nuggets.
So go ahead and wrap it up. Like, what would your big points you want to give them from this one here today?
Man, the biggest points I would like to tell you, you know what I'm saying, is that what I run into a lot is don't go down with the Titanic, man. You know what I'm saying? So that's the majority thing, is to actually make sure, you know what I'm saying, in order to get anything, to get the benefit of the doubt, or, you know what I'm saying, to get the best deals or to put yourself in the best position, just make sure you take care of your credit. And then if you're not the one dragging your credit down, please don't let nobody else drag your credit down. It's okay to say no to family members. It's okay to say no to close friends and stuff like that. They'll just know that, you know what I'm saying, you're not the person, you know what I'm saying, that's going to put yourself on the line. Like, hey, look, you may be able to slide them a few dollars here and there or something like that, but hey, I'm not putting my credit on the line because that stuff is going to live with me for the next 7, 8, 10 years, whatever it is. So definitely, you know what I'm saying, it's okay in those situations to be a little selfish. I'll put it that way. And then, you know what I'm saying, if you saying no to them actually, you know what I'm saying, kind of tarnishes that friendship or tarnishes that relationship or whatever the case may be, then it was never that strong to begin with. Because they should absolutely understand that you're trying to better yourself. And they need to be trying to do the exact same. Outside of that, man, you know what I'm saying, it's always a benefit to purchase a home instead of rent.
Yes.
As we continue to talk about on this thing, man, and continue to try to ingrain in people's head is that it's always better to have a house. In 10 years, trust me, you will thank yourself for it. Yes. Because then at that time, now you have an actual nest egg. Now you have something that you can seriously retire on. Yes. 401k is great, but in 10 years, you know what I'm saying, you can't get $40,000, $50,000 just by saving to for most people, I say it this way, just by saving to a 401k. But you can do that through a house by, you know what I'm saying, you purchasing, you owning it, you paying down the principal on it, and then the actual value of it increasing. You can definitely get there.
Yes. And the only thing I would add to that is I'd say credit is your foundation and the foundation for your future. And so you got to take care of it just like you would your kids. You know what I'm saying? Is you're not going to let any harm come to your kids. You're going to do everything in your that you can to put them in the best position to win. You know, you're gonna take care of them. You're gonna get doctor's appointments and go to the dentist. You might not even go to the dentist for yourself, but you're gonna take your kids to the dentist. You know what I mean? So you think of credit that way as also as the foundation to your future. And then I would also add, you gotta start with those behaviors. You know, as Corey said earlier, and as I said earlier, creating account difference. That's a little bit harder for you to get to that money. You know what I mean? Put it already in your budget so it's already there. That way you ain't even thinking about it. You know, you shave it right off the top and just put it there. Every time 10% goes into this account, and you know, just like you do your tithes, if you give to your church or your donations that you give to people for those, but for those that don't do either of those, that are, you know what I'm talking about. I'm keeping it real here. You gotta find a way to help yourself save so that you can put yourself in a better position in the long run to have more options later. So as always, Corey, man, it's always good talking to you about this stuff on here.
Always a pleasure, man. Hopefully these people catch some nuggets over there, you know what I'm saying, and actually listen to some of this stuff that we're talking about over here and put themselves in a position. And then the other thing is, you know what I'm saying, if you guys are watching this and you guys have put yourself in a position just by, we've motivated you to do these things or whatever the case may be, feel free to reach out to us and let us know. We always like to hear these stories and stuff, and you never know, you know what I'm saying, we might have to put you on, you know what I'm saying, so we interview and talk to you about it.
Yeah, I mean, that's definitely right. And then the other side, like I said, to tag off, I ain't trying to have the last word, but you know, I mean, every time you say something, you make me think of something else. You know, because they also got to remember that you don't have to start this path by yourself. Me and Corey are here to help you. So you don't have to start it by yourself. Look in the notes, call us. We got our numbers and contact information in the notes. Call us and let's talk it through, because sometimes, look, everybody sometimes needs some support, and let's just keep it real. If I'm around a lot of bad credit people and people that don't have these behaviors in place, it's hard to then change on a dime because they're gonna keep keeping you in there. But sometimes you need some extra support to help you do the right things and walk through the right path. I don't have a problem doing that. Call us up. We'll help you and walk you through and get you on that journey to buying your own home and getting you there. So, got anything else, Corey?
No, that's it. That's it, bro. Right, you hit the nail on the head.
Hey, man. Well, hey, you be safe out there. Stay blessed. Hey, I think next week we're going to talk about this $15,000 Biden grant that,
talk about it.
You know, that's coming up. And
coming.
It ain't passed through yet. It ain't passed through, but everybody wants to get tuned on that, because that's 15,000, up to 15,000. They put the up to in there, but 15,000.
You know what that means.
That you can use toward buying. So,
even if it was up to $1,000, I mean, you know what I'm saying, it's more money than, you know what I'm saying, what you started off with. So
Yeah.
any little bit helps.
Yeah. So next week I want to talk a little bit about the different things Biden's administration is doing, because he's focusing a lot on homeowners and first-time homeowners and people of color and all these things. So we're gonna dig into that next week if you're good with that.
I love it. I love it.
All right, boss man. Hey, tell the family I said hey, and we'll talk soon.
You do the same. All right, sounds good.
Later.
All right, later.